I wish you are doing very well. Today we are going to complete our discussion about audit assertions and substantive procedures. The last session we have explained what are the audit assertions and learned that they can be classified into transaction-related assertions and account balance-related assertions. In this session, we will explain the substantive procedures that can be performed by the auditor in order to accumulate sufficient appropriate evidence supporting audit assertions and helping the auditor to form a conclusion and to express an opinion on the financial statements under audit. As mentioned previously, the objective of conducting an audit of financial statements is to provide financial statement users with reasonable assurance about whether the financial statements are free of material misstatements and present fairly in all material respects the financial position of the firm, its results of operations and cash flows in accordance with GAAP. Users of the financial statements rely on the auditor's report to reduce information risk associated with the financial statements and hence to reduce cost of capital. Auditor need to accumulate sufficient appropriate evidence that support the various audit assertions in order to be able to form a conclusion and express an opinion on the financial statements. As mentioned previously, there are two classes of audit assertions: transaction-related audit assertions and account balance-related audit assertions. The auditor needs to accumulate and evaluate evidence. Such evidence should be sufficient and appropriate in order to support the various audit assertions. At the end of the day, the auditor will be able to form a conclusion and express an opinion on the financial statements. How can the auditor accumulate such a sufficient competent evidence? The auditor can accumulate such evidence by conducting substantive audit procedures. So audit procedures are performed in order to accumulate sufficient appropriate evidence. The International Standard on Auditing number 500, which has the title Audit Evidence, states that the objective of the auditor is to design and perform audit procedures in such a way to enable the auditor to obtain sufficient appropriate evidence to be able to draw reasonable conclusion on which to base the auditor's opinion. So again, the objective of conducting an audit of financial statements is to express an opinion on the financial statements. The auditor provides reasonable assurance about whether the financial statements are free of material misstatements and present fairly in all material respects the financial position of the firm, its results of operations and cash flows in conformity with the accounting standards generally accepted. In order to be able to express an opinion and provide reasonable assurance, the auditor needs to accumulate sufficient appropriate evidence. The auditor performed audit procedures in order to accumulate such sufficient appropriate evidence. Audit procedures include test of controls and substantive procedures, and the substantive procedures includes test of details and analytical procedures. In this session, we will focus on the substantive procedures. So the auditor needs to accumulate sufficient appropriate evidence for conclusion. Audit evidence is obtained from audit procedures, including test of controls and substantive procedures. Test of controls are procedures performed by the auditor to test the operating effectiveness of the client's internal controls. So any organization should have internal control system. At this stage, the auditor examines the effectiveness of the client's internal control in preventing and correcting material misstatements. Substantive procedures are procedures performed by the auditor to detect material misstatements at the assertion level and include test of details and substantive analytical procedures. Test of details of classes of transactions, accounts balances, and disclosures, and substantive analytical procedures. The auditor should design and perform substantive procedures for each material class of transaction, account balance, and disclosure. In this session, we will focus on the audit substantive procedures. The auditor's substantive procedures should include the following audit procedures related to the financial statement closing process: examining material journal entries and other adjustments, and agreeing the financial statements to the underlying accounting records. Audit substantive procedures include documentation, confirmation, physical examination, inquiries, observation, performance, and analytical procedures. The first substantive procedure is documentation. Documentation is the auditor examination of clients' documents and records to substantiate the information that is or should be included in the financial statements. Such documents could be internal or external, in paper form or electronic form. For instance, to verify the accuracy of the client's records for sales transactions, the auditor may examine the customer order, the shipping document, and duplicate sales invoices that the customer retained for each sales transaction. So the documents examined by the auditor are the records used by the client to provide information for conducting its business in an organized manner, such as sales invoices, purchase orders, bank statements, vendors' invoices, materials requisition records, overhead cost allocation sheets, shipping documents, payroll checks, long-term debt agreements, and so on. Some documents, such as stock or bond documents and other financial instruments, represent direct evidence of the existence of an asset. In other words, they provide support to the existence assertion. An inspection of such a document also provide audit evidence about ownership or value. In other words, they provide support to the valuation and rights and obligations balance related assertions. Documents examined by the auditor can be internal or external documents. Internal documents are prepared and used within the organization, such as sales invoices and employees' time records. However, external documents has been handled by someone outside the organization, such as vendors' invoices and insurance policies. In general, external documents are considered more reliable evidence than internal documents because external party, independent party agree about the information stated on the document. However, the internal documents are not provided by independent source. That's why it may be biased in favor of the client. However, if the client has effective internal control system, the internal document can be accepted by the auditor as a reliable evidence. Clients' documents could be in electronic or paper form. It's common in many companies for a considerable proportion of clients' documentation to be available only in electronic form. For instance, some companies use electronic data interchange to complete transactions by the exchange of electronic messages. Image processing systems are also used to convert traditional documents available in paper form into electronic images to facilitate storage and references. Typically, traditional paper documents are not retained in this case. Both paper form and electronic form documents are valid and useful, and they are accepted as reliable audit evidence. The statement of auditing standard number 80 recognizes these changes in the nature of documentary audit evidence and accept electronic form as a reliable audit evidence. Finally, you need to differentiate between vouching and tracing. Vouching is the auditor's use of documents to support recorded transactions or amounts in the financial statements. It starts with a number in the journal or financial statement, and then the auditor finds the document or record that support that number. Vouching provides evidence for existence assertion. Tracing goes the opposite direction. It looks at a document and traces the path of that document all the way to the financial statements. It provides evidence for completeness assertion. For instance, to vouch recorded acquisition transaction, the auditor might trace from the acquisition journal to the supporting vendors' invoices and receiving reports, and thereby satisfy the existence objective. However, if the auditor traces from receiving reports to the acquisition journal to satisfy the completeness objective, it's not vouching, it is tracing instead. The second substantive procedure that can be used by the auditor to accumulate sufficient appropriate evidence is confirmation. Confirmation is the receipt of a written or oral response from an independent third party verifying the accuracy of information that was requested by the auditor. Confirmations are requested from debtors, creditors, bankers, and legal advisors. They are highly reliable because confirmation comes from independent source. However, they are relatively costly and may cause some inconveniences to those asked to supply them. You need to differentiate between positive confirmation and negative confirmation. Positive confirmation asks the recipient to respond in all circumstances. However, negative confirmation asks the recipient to respond only when the information is incorrect. The statement on auditing standards number 67 requires confirmation of a sample of accounts receivable because accounts receivable represent a significant balance in the balance sheet. There is a high degree of subjectivity associated with its measurement. There is high degree of subjectivity and uncertainty associated with estimating uncollectible amounts and determining the amount of bad debt reserves. Hence, it can be exploited to manage earnings. It can be exploited to push earnings up and mask the poor economic performance of the firm for opportunistic purposes. That's why the statement on auditing standards number 67 requires confirmation of accounts receivable. So confirmation is required for accounts receivable according to the statement on auditing standards number 67. Management of the client can exploit the flexibilities inherent in its measurement in order to manage earnings upward, in order to mask the poor economic performance of the firm. This is within the limitations of GAAP. That's why it's called earnings management. It's not related to fraud. Fraud is illegal. However, earnings management take place within the constraints of GAAP. So it is the auditor's responsibility to confirm accounts receivable, and he can do so from the customer. He can confirm the accounts receivable amount from the customer. This procedure, confirmation, is also useful in verifying many other types of information such as cash in bank. Cash in bank can be confirmed from the bank. Accounts payable can be confirmed from the creditor. Notes payable can be confirmed from the lender. Advances from customers can be confirmed from the customer. Bonds payable can be confirmed from the bondholder, and so on. Another substantive procedure that can be used by the auditor to accumulate sufficient appropriate evidence to support the various audit assertions and to be able to form a conclusion and express an opinion on the financial statements under audit is physical examination. Physical examination of tangible assets is very useful in providing evidence of the asset's existence. It supports the existence assertion. It consists of inspecting or counting tangible assets such as cash, inventory, land, building, machines, equipment, and so on. The auditor can also inquire about something and receive a written or oral response from the client. However, evidence provided from inquiries cannot be regarded as conclusive because it is not from an independent source. That's why it can be biased in favor of the client. That's why evidence through other procedures is needed to support evidence provided from inquiries. Observation is another substantive procedure that can be performed by the auditor. Observation means observing a process or procedure being performed by others. For instance, the auditor may observe a client's personnel counting inventory to determine whether they are properly following the instructions. However, observation is limited to the point in time at which observation takes place. In addition, the act of being observed may affect how the process or procedure is performed. Reperformance is another substantive procedure. The auditor may reperform accounting procedures or internal control procedures in order to check whether the outcome will be similar to that obtained by the client's personnel. For instance, the auditor may trace posting from the sales journal to the general ledger accounts in order to be confident that when the same information are included in more than one place, it is recorded at the same amount each time. Finally, the auditor can perform analytical procedures in order to accumulate evidence. Analytical procedures involve using comparisons and relationships in order to assess account balances and whether they are appearing reasonable. Analytical procedures include investigation of significant fluctuations and inconsistent relationships. It includes investigation of abnormal amounts, odd amounts that represent a deviation from normal or logical amounts. The auditor may, for example, scan the sales journal looking for large or unusual transactions. The auditor may also use financial ratios. The auditor can compare the gross margin percent in the current year with the preceding year, and if the change is abnormal, if the change is significant, it gives the auditor the feeling that there is inherent risk associated with this amount. It indicates that further investigation is needed. Further audit procedures need to be performed in order to accumulate more evidence to verify the validity of the amount. The auditor may also use debt to equity ratio in order to evaluate the client's ability to meet long-term obligations, in order to evaluate the client's ability to continue its operations as going concern. It is the auditor's responsibility to examine whether the client is able to continue its operations in the future as going concern. And if he has doubt regarding this issue, he needs to add an explanatory paragraph after the opinion paragraph explaining this issue. So, the analytical procedures are used extensively in practice, especially after the increased availability of computers that perform calculations and analysis. And this brings us to the end of the session, and thank you so much for listening.